Good evening, everybody, and thank you for joining us for tonight's webinar on how to find positive cash flow property. My name's Justin Hams. I'm the Senior Portfolio Manager here at Real Estate Investor. Just a short note, just like to say thank you to people for coming along to the webinar. We understand it's getting close to Christmas. Everyone's winding down and in a very busy period, so we do appreciate you making the time to come along. All right, with that in mind, I will get things moving quickly. And after we've had a bit of a chat about the positive cash flow property cycle and system that I'm going to show you to utilize our software to get some great results, we'll have some questions afterwards. Okay, so let's get going. Okay, first of all, a little bit of housekeeping. Please ensure, obviously, that your speakers are turned up and that your volume's not on mute. You can also test the audio in the control panel of the GoToMeeting software in the audio preferences part. If you can't hear us yet, as we spoke about, just check the speakers and so on. And to make sure that you get a clarity of voice from myself, if you can turn off any programs in the background, such as Outlook, Skype, and so on. And of course, the faster the internet speed that you have, the better quality of the audio that you will receive. Okay, the general disclaimer, this presentation that I'll be doing for you guys tonight is obviously very generalized. It's to show you the scope of how I utilize the tools personally to get the results that I need to via this particular strategy. It's by no means an individual replication of any of your circumstances, so please make sure you actually see your own professionals, be it finance or any other type of legal, before you make any decisions. Okay, a little bit about myself. I've been a property investor both personally and helping other people for over 25 years. I'm a property researcher and also a qualified buyer's agent in several different states. My professional experience is helping people get discounted properties, also helping with renovations because of my experience doing it for a living. And I also help people do subdivision and developments as well. Tonight, I'm going to show you how I look for my clients utilizing this system, which I utilize every day. Okay, what does Real Estate Investor do? Basically, helping investors to build and manage your property portfolios. We help you do the searching, we help you do all the comparisons and so on, and we help track your actual portfolio, whether it be 1 or 10, and teach you how to do it yourself if you want to do it in the do-it-yourself route. Okay, what have we been doing? We've been around since 2016, and as we just talked about, our goal and what we do is help clients build wealth through property. And the information you receive, not just off our system, but also our staff as well, is second to none with the amount of experience that we have. We have a member base of around 300,000 at present, and you've got 3 options for the type of membership that you can gain from the company. You've got the free educational stuff and content with basic data and suburb reports and so on, or the do-it-yourself Pro Tools, which is what I'm going to be showing you how to use via the cash flow strategy tonight. Or you can go the premium route, where for people that don't have the time or are not confident to pull the trigger, say, themselves, they can utilize someone like myself for doing the sourcing, the research, and giving you the outcomes of all the research so you can make informed decisions yourself. So it's a great one too, especially if you've already got investment property. All the fees associated with that should be tax deductible. All you have to do is speak to your accountant to clarify. Okay, obviously we have a few partners. You know, we've got RPNZ, which I'll be showing you how to utilize as part of the software later on. We've got Verdi Plus 2, the mortgage brokers and financial advisors. Of course, Xero accounting software that's part of our dashboard, where you get a non-GST cash book to either account for just one or your whole portfolio of properties. Okay, we've also got Vault for appraisals and valuations, and of course NZME for New Zealand's premier media companies and so on. Okay, so why do we invest in property? I'm just going to put all the points that it's got here, because for me personally, I think we can encapsulate all these things here, both building wealth, set up for retirement, retire early, tax benefits, income, replacing your current income. They all come down to one real thing. It's freedom of choice. So we do this so we have the freedom of choice to make the decisions on what we'd like to buy, what we'd like to experience, what we'd like to do. It gives us advantages to be able to do the things that we want to do. Okay, so the actual system itself. Now, I'm going to, of course, go down and make this much more detailed as we go along, but the simplistic wheel that we're looking at. So first of all, we search for a property, we analyze it against other like properties, then we look at acquiring it, we track it to watch its equity growth and the debt serviceability via the accounting, and then when we can see that we're ready to fire and pull the trigger again, we actually would pull equity out or utilize a property to go on to our next deal. Okay, so what is a positive cash flow property? Quite a simplistic question, but it's a property that puts money in your pocket after all your costs. So it's not just the mortgage repayments, it's also utilities. If you're in a strata, it's the strata fees as well. But it's also the property management fees or anything else like that. So it's all the costs involved. So at the end, after you've paid off everything, it's still putting money into your pocket. And so the most important part to doing this is actually crunching the numbers, because there can be something on the surface that looks like it's a good deal, but after we analyze the data and crunch all the numbers, we can see sometimes that what looked good on the surface could actually lose us money. So that being the case, the most important part is actually doing the research on the data. And of course, if it's our first or it's our third, fourth, fifth property that we're actually purchasing, we want to purchase a balanced investment property as being our main goal. So we get some value out of it, we can pull equity, but of course from the cash flow point of view, it's still making some money. If we have a balanced property where our debt serviceability in the eyes of a financial institution is taking care of itself, so to speak, then the likeliness that they will lend us something in a shorter period of time will be greater. Okay, like anything, there is pros and cons with any strategy. As far as the cash flow positive property, we'll look at the pros. As we just spoke about, it's actually putting some money in your pocket after you've paid everything. So there's no financial impact on you in a weekly status or so on. Once you start accumulating, it can balance the portfolio like we previously spoke about and make sure that you can keep the likeliness of gaining finance to replicate one after another. We already spoke about the finance part, and obviously the golden goose that everybody looks for. If you can find one in a high appreciating area that's cash flow positive, that's as good as you can do. The cons, the income that you do get on top of all the costs at the end, unfortunately, is tax deductible, is taxable, and where you actually are. So more often than not, most of the cash flow property will be in a slower capital growth area where you're not earning the equity at the same speed as what you would in a blue chip suburb. And you're looking at most likely that there'll be entry level suburbs. I'm talking about price wise, and also regional areas. Okay, I always throw this slide into no matter what strategy that we're talking about when we're doing a webinar. Reason being, they are all foundation criteria for no matter what strategy we should be doing. Now, if we can actually find a motivated seller, now when I say motivated seller, I mean someone that really wants to sell. Whatever their circumstances are for selling, it's no concern of us and none of our business. I don't mean that in a cold or calculating way. I mean it in that it shouldn't be any of your concern when this should be done totally from your head, no emotions involved. If it was your own house that we were looking at, then of course it's a different story. But as this is a business for you, investing in property, you need to be able to make your decisions with a clear head and without emotions involved. Now, when we say checking the suburb health, what is happening to the suburb now? Has the growth been going for 1, 2, 3, 5 years? Is infrastructure money being spent around the place? Is there big type of developments going in that will be attractive to the tenants and homeowners that are living there, that are not just that put on the table at the local councils or so on, but they've actually been approved? All these things can actually be real pointers for us to an arrow upwards, so to speak, in capital growth or growth for the area, moving of the property prices up. Now, also the market valuation of a property. This is important, but no matter what you do, make sure you don't take whatever you actually have first as gospel. Now, you need to do your own research, because especially if it's a desktop valuation, or if you're going to pay for a valuation, that's totally different. But you need to measure like with like. Now, anything on a computer or a software or an algorithm is going to give you an idea based on the figures, but when you're doing a valuation, nothing can be as accurate as a human. So that being the case, you need to look at what type of dwelling it is. What type of bedroom count is it? Does it have extra bathrooms? Does it have a huge garage? Does it have views? Does it have features that the house next door doesn't, that nothing but a human could actually differentiate the difference between it? All these things make a difference. So the more research you do of like type properties, the more likeliness that you're going to come out with a much more accurate valuation to be able to see if the property is undervalued or not, or if it's overvalued. Same thing with the sales. I just spoke about that with the listing histories and so on. Now, with the forecast of the property's long-term performance, I'm going to show you how to do that in the system with the software that we've got here. And the huge advantage of that is too, we don't put our hand in our pocket to get any type of advice or anything at that part, but it's a big part of our criteria to give us at least a tick sheet to say that we should research this property further. Also, your timing of purchase is important. Most of you would have heard of property clock or property cycles and so on. Be aware, though, that no matter what stage of the property clock, no matter where your present locality is in the cycle, there are always good deals to be found. It just means the research needs to be more detailed in the times of a down cycle. And it means that once you've got all that information, you can probably get better deals, that things that other people can't see because of the research you've undertaken. Okay, so obviously this is an important part to number 8. What is your ceiling for your purchase price for the acquisition? Whatever you're comfortable with, and as we talked about before, do this with your head, not your heart. Once you've got that line in the sand amount, do not go over it, especially if you're going to an auction. It is a skill that is taught to a lot of auctioneers' staff to work the crowd. In the excitement of an auction and so on, if you get towards and at your maximum, and you've got someone in you going, oh, come on, just another couple of thousand, you'll be right, it can be conducive to changing your mind for where you would have been firm before. So if this is going to help you too, if you are going to go and bid at an auction for anything like that, take a friend with you that can be that little man on your shoulder, so to speak, that says, no, we're going to stop now. Okay, so the tools themselves, this is the main dashboard where you see the search, my value research, analyzer, and tracker. Now, I use these every day personally as a buyer's agent and also a property researcher for our clients as well, which is one of the reasons why I'm doing the webinar for you, because of the amount that not only that I utilize this system, but the great results and time saving that I get from the system itself. Okay, so what can we get out of it? You know, around NZ, we're looking at around 100,000 listings at a time from the 5 biggest property portals like Trade Me and realestate.co, NZ and so on. And there's also 34 filters that you can manipulate all the information that you get back from your search results. Be aware though too, of course, if we put them all on, we'll get no properties back, because you need to start a little bit shy and add criteria as you're going along, so you get to see what is available, whether it be the price point, the location, and of course the dwelling type in an area that you're looking for. You can see too the advanced data, which I'm going to go into a bit further later. You've got watch lists, save searches, and alerts you can control to your email. We've got about 6,300 suburbs in NZ, and you can analyse pretty much every one of them. The beauty of the system is too, it's globally unique. There are bits and pieces in other software that we have, of course, but there's no other ones that puts everything together to give you a time-saving, streamlined outcome base from research like our software does. Okay, so I've just thrown in the search up here, and because we're talking about positive cash flow tonight, you'll see I've put in the keyword strategy in positive cash flow. Now, the keywords on the left-hand side, whatever strategy you put in, whatever those keywords of the strategy are, anytime that they are listed in the listing material of an advertisement for an agent that they've put on a property and so on, then that's going to come back in our search results for what we get afterwards. Okay, you'll also notice you can go the manipulation from property types, not just the suburb rental yield, but also the property rental yield as well. Like, it can go down to very fine depths and so on, but we need to have a broader scope to start off with. Okay, so as far as some of the keywords, these are the ones that we couldn't see in that drop down before that I focus on a bit more for this type of strategy, especially, the double income, granny flat, positive cash flow, 2 incomes. All these things point to the more possibility or likeliness of the property actually being positive cash flow rather than just what a selling agent is telling you. You've got some of the filters here. Now, I'm going to take you through a property that I was looking at earlier today, and I'm going to show you the rationale of what I was looking at to identify whether it was suitable or not and why. So you can see I've just taken a snapshot of the previous screen, but all I've done in a particular area, which we'll go into in a sec, is I want a minimum of 5% rental yield for the suburb. Now, if you're talking about a house or you're talking about a unit and townhouse, when you're getting into either parity or positive cash flow territory, there are different percentage rates to start. For a house, now I am generalizing, and of course there's going to be movement up and down either side from this. For a house, you're looking at roughly 5% to start on the way to being positively geared. And for a unit or a townhouse, you're looking at 7 or 8% most of the time, taking into consideration utilities cost and strata fees and so on, depending on where the property is. Okay, so I've hit that search results, and I was going down Southlands Way, and I like the first property, so the one in Bluff, because of the amount of growth that Bluff's had over the last 4 or 5 years. And we can see here too, these are the important parts we need to look at. Okay, from the minimal criteria that I put in, I've asked I want minimum 5% return yield on my property. As you can see from the first 3, there was a lot more than this, but I've just taken the first 3 from the results. We've got 7.7, 5.2, 6.3. Now, it's also important to look at what the properties are worth and also what they're getting as far as the median listing price. Always be aware too, the median listing price is what people are asking for, not what they actually get for the sale result. So it can be very close, or sometimes it can be quite further apart, the actual sale price later on, depending on the amount of discount in the area and whatever the demand and time you are in the property cycle at the time. Okay, so for the first one, we can see at $210,000 that we see here that it's just over the medium asking price at 195. Now, it doesn't matter if they're over a medium sometimes of that 100% if the money is going to be there to justify it. And as we can see from the gross yield in this one at 7.7, this is definitely going to be positively geared for a house, unless there's underlying circumstances. But we always go in and have a look at the actual listing material itself. We can also analyze in full, and this is where we actually see the true figures of a property about what we can expect to forecast at the bottom line. And this is before we actually get a building inspection, a pest inspection, before we do any type of putting our paws into our pockets to get some money out to get information. This gives us a lot of those ticks in the boxes to say, okay, this is worth going a little bit further and researching this one more. So this is the listing material that we've looked at, and we can see, new carpet, new vinyl, drapes, vanity. You can see it's had some renovations done on it already. Now, if we're wanting to just hop in and get going as far as buying and renting out an investment property, of course, jump onto the actual listing material itself, click on the pictures, because nothing says pictures, nothing tells you true stories like pictures do. So have a look about what has or hasn't been done. And look, you'll get to see, unless they are taken from a very large angle far away, the condition of whatever those renovations are too. Okay, we talked about that, the medium and so on, and also the medium weekly rent for the area for this particular dwelling. So I'll go back to that quickly too. It's important to remember too, this is the medium for a 3-bedroom house in Bluff, not just a house. A 4-bedroom house and a 2-bedroom house, the mediums will be different and the percentage rates will be different also. You can even have different growth between bedroom counts depending on the demand for particular bedroom counts or dwellings in an area. Okay, so we can see the snapshot of what's going on with the property. I'm going to explain this a bit further once we go into the Analyse in full now. Okay, when you first go in, this is specific to the actual individual property. It's not going into just a house in the suburb or so on. The first thing we do always when we go in is we edit to our particular circumstances of the individual property. So reason being that depends on the deposit you have. I'll always put roughly a 20% deposit to start, especially for an investor. Of course, there'll be people that have 5 or 10% or even have 40%. You can manipulate the data any way to get the true reflective outcome figures yourself by doing this. Capital improvements you see a little bit further down, that's any renovation costs that you might put into the property before you actually get going to rent it out or to flip it. But for this strategy, we're looking at holding on to it. You can also see that you can put any type of loans as well, interest only or P&Is. And the beauty is too, there's also got facilities to measure split loans as well. The interest rate, I've just left at 4.7 because the system generated that roughly for the area. And of course, the valuation fees and so on, that's pretty much standard. Okay, so we've gone next to rental part. So I've just left it, as it's just been renovated, I've just left it at the medium rent for a 3-bedroom house in Bluff, which is $290. So I've just left it at that. The rates, they come up automatically with the algorithms of our software. Whatever council that the house sits within, it will generate the appropriate rates for the particular council and the dwelling type within the area. So you pretty much don't need to touch that. Be aware though that all these costs are malleable if you want to change them anyway. And as far as, if we had a townhouse or something, of course, we'd put body corporate and things like that. But in this instance, we're looking at a house, so not. Okay, then we go on to the entity. You can put this in a trust, you can put it in a business, you can put in your own personal ownership, and you can even split the percentage of who owns what. If it's, say, in a trust, you can have it split to 2, 3, 4 beneficiaries and so on to have accurate reflections of what the whole and individual makeup of how the property is doing. CPI, just left at the standard 2%. It's a little bit below that at present, I think, but the system will always put that at 2, and it will put the capital growth as a default at 6. Now, I've put this at 5 because it's important that we measure the capital growth to the particular property and the area it sits within at the time. Now, I've been conservative here because I know a house in Bluff is greater than 5% at the moment, but I'll explain that a little bit further when we go into the valuer part soon. We know also from the My Value, which I'm going to show you, this house was pre-1968. It's roughly 65. Okay, and the recent renovations, we can put in none, full, or partial to reflect true depreciation and so on of the property. Okay, so this is what we get, the outcome of it. Now, we've got a 6% net yield, which is really good, and there's our $290 of income per week and a capital growth rate at 5. If we know what the capital growth rate is, if we know what income we're getting, and we know what we're actually paying for the property, being mortgage-wise and property managers-wise, then all these figures are very accurate outcomes before you've actually undertaken the venture itself. This can be changed as well. So if you have a jump in growth in the area, you can change this into the system to reflect the jump in growth. If it drops, you can put in also, so it keeps your figures accurate all the time. We can see here after 1 year at the present growth rate, and remember, I've been conservative here, it is actually slightly higher than this. This property that we're looking at will grow $10,500, and if I go to the next screen as well, we're also making money off it in our pocket each week. You can see too, because this is an older house, the depreciation doesn't have a lot of influence. If this was a much newer house, the depreciation can make substantial differences as far as the difference between pre-tax and after-tax cash flow. But as we can see here, you know, if we're looking at a property that's not costing us a lot as far as getting into the market, been at around 210,000. It's also within a year at present current rates going to be making us over $10,000 in equity, and it's also putting $87 in our pocket each week for the trouble. So when we look about the outlay and we look about the returns, this is a very good return for the amount of money that's been put in the first place. So how do we actually do all this research to compare what's going on and where? We go into the My Value and My Research. You guys are very lucky to be able to get this within our software for the price that you can. If you were going in alone for just RPNZ without any of our software, it would cost you significantly more times our total software cost just to have this alone. But I'll explain that a bit to you a bit further later. Now, that property that we're just looking at in Fall Street Bluff, I'm going to use this as our example and show you the rationale of how I came about the outcomes I did. So we just put our property address in and press search, and our property comes up. Now, you can see all the information. This is important to us. Not only are we talking about comparing a dwelling for type, like we've talked about, you've got to compare a house with a house. We've also got to compare the bedroom count as well. And it's important too, you've got to remember the land area. Now, especially a place like Bluff, there's a lot of quarter-acre blocks, that 1,012-acre blocks. So this is obviously at 534, one of those old quarter patches that have been split in half. So that being the case, if we can measure other properties like ours, being the dwelling, bedroom count, but also get the same sort of block size roughly, then we know our comparables coming out the other end are more accurate. Because of course, land is worth money. You can see the actual age of the property here. We got from 1960 to 1969, hence why before we've put it at 65, and also the land area like we talked about. Okay, so on from there, the actual sales history gives us a lot of information, and so does what the marketing advertising history does. We can see that this person has bought the house only 12 years ago, and they bought it for $83,000. So if they hadn't spent any money and they get somewhere over the $200,000 mark, they are making an exceptional gain in a short period of time. However, we do know that they've spent money on the renovation. How much that is, I'm not sure, but it's going to be probably a good gain for them. But the thing that we need to also focus on is the advertising history. How long has it been on for? So we're knowing this is a brand new listing, which I wanted to get to you guys anyway to show you that we're looking at things that are just coming on. If it was an older listing too, we could watch if they'd actually put the price down. How long has it been on? Has it been on for 1 month? Has it been on for 2, 3? We measure the average days on the market for the suburb too. And if we can see that this has gone past that, we can see several drops in their actual asking price, and even more so, if we see that it's gone from one agency and they've been sacked and another agency has been brought in, you know that the vendors are most likely getting frustrated and they want it sold. Now, without being morbid, that's an extra thing for you guys coming in for negotiations and so on. When people get frustrated, they make decisions to be more flexible when selling things. Okay, so we've spoken about all the history. Okay, going back to the property, this is the important part that we're talking about, the comparative market analysis. So looking at comparable other properties as close as geographical possible and over the shortest time frame possible also, to give us the most accurate reflection of the true value, not what we've been told by other people, but what we're coming up with via the research of what we're doing of actual facts. Okay, so I've clicked on that and you'll see the refined search on the left-hand side. So we've got our target property at the top, but of course it's going to come back with way too many properties unless we drill down. Now, personally, I will put target suburb only. You can do this from 1 kilometre to 5 outwards about the search radius around the target property you like. For me, I wanted to do the target to the suburb because of this one being near the water and so on. I wanted to get something all around it, not just from one side, but across the properties as well. I've also done the sales date. You can determine how far back you go. Me personally, I always start about a year. If you get way too many results and there's a lot more transactions happening, then drill it down. Make it 6 months, 3 or 4 months. You don't want to get too many listings back, because you want to be able to study the ones that you are getting back as close as possible. And of course, the ones that have sold the nearest time ago to what our property is the most accurate reflection, if they're comparable to ours, of what the true value of our house could be. So you can see here, I've done the time we just spoke about, excuse me, the target suburb only, and also I'm being specific. I'm doing only 3-bedroom houses and only 3-bedroom houses with 1 bathroom. So I've clicked to refine after that. Okay, this is what we're coming back with. You notice I went quickly because there was a lot more, but I went down and actually looked at the photos. And remember what we talked about before? Some of the properties are bigger, 1,012, and I wanted to, and 827. I omitted all these properties because I wanted to get ones back closer to what ours was. So these are all the 1,000s, as you can see, straight off. Okay, the ones that I've actually ticked from before, I got 6, which I'm going to show you now. If you generate the PDF or the document, depending on what type of file you would like to come out with, I've just clicked. Now, this comparative market analysis is incredibly detailed. It is going to give you the amount of information plus more from whatever angle that you're looking upon to actually do your research in the property. You can see from all the different subjects in the left-hand side, all these things matter as far as doing your research. You're not always going to use every single one of them. So rather than me sit here and talk to you for hours tonight about every one, I've actually just drilled down to do a few of the most important ones that you would go to first. You can see here, you're looking at the appraisal price there of 119 to 158. Remember, that is a desktop valuation at the bottom, like we talked about before. Features matter. Now, as you can see, this has harbour views. So those features make it different to, say, a property on the other side of the hill where you can't see the water. All these things can't be taken into a desktop valuation. Okay, so I've clicked on the property details, and as you can see, this gives us our council information about the property, the lot, the DP numbers, the title numbers, and so on. It also gives you your valuations of the land itself, land areas, and the actual description titles of your property should you need to go to council to ask any questions or so on. And as you can see, type of ownership, freehold. In other words, it's a single title, not attached to anything else. Okay, we've just seen the property details. I've also clicked down on the area profile because this is important as far as seeing what is happening over time. You can see it's not a large area, really. It's only 9 square kilometres with only a population of 1,540-ish in 2006, but still decent amount of growth for the 7 years to the next measurement. And the age group is a lot of retirees, obviously, because it's a very pretty and chilled place to live. Now, the current median sale house of prices in the area, it's got 159. When we talked about medium sales prices, remember, that's all bedroom counts and all dwellings. It's not the particular one we're looking on at the moment. Okay, so the change in median price. This is what I was talking to you guys before, where I put in my calculations at 5%. Now at August, it was 5.8%. And this at present is just slightly below that as well. So you can see that even though I've gone a little bit shy as far as being conservative in the calculations I did, it still came out as $87 positive at the end of each week. So depending on how much more that is, you could possibly get more than that. Okay, it's important too, the rent. What are we going to get for the place? And, is it going up? Is it going down? And remember, these are mediums as well, just like the actual housing ones that we just looked. Because we look here too, we're looking at what, roughly 220 or so on. Well, we know the medium for a 3-bedroom in the area is 290 at present. So it's important that we take on board and measure all the information that we're given, but it's also important that we become aware of when to push something aside and take something else as what is totally accurate. And you'll get that through just practice, as simple as that. Okay, so the tools themselves, what are they for? They are built specifically for do-it-yourself investors. We've been through the search itself, my value and my research, the analyzer. Now, you can track all your properties as well, whether it be 1, whether it be 10 in property, the portfolio tracker, and also doing all that. It gives you an eye of how much equity you've got, what your debt serviceability ratios are, and when you're ready to fire again. Okay, so are you ready to take action? This is the number one thing that most property investors don't do. You will be amazed at the amount of people that will go and pay huge amounts of money to get educated, which I think is a great thing. And when it comes down to actually pulling the trigger to go and do what they've learned, they get absolutely, whether it be terrified, they get analysis paralysis, but there is a large percentage that don't actually do anything. So you guys have got the opportunity tonight. If you are here, you're obviously interested in property investment and you're obviously interested in making a passive income. Utilizing the tools that you've just seen me do tonight, and of course that's just a small snapshot. If we had more time, we could go into a lot more detail, but I'm just trying to give you a broad overscope of what is possible. Now, the tools themselves, they're normally $149 with no lock-in contract. And look, even if you have one investment property at present, it's tax deductible. All you need to do is just talk to your accountant to clarify that. Now, this webinar special at $79, it's the equal lowest membership price that we've ever had because there's no lock-in contracts, so you can come in and go out whenever you please. But be aware, this price, we don't know how long this will stay on or if it will be available for a long period of time. We have to pay, obviously, our third-party data providers for this, but this is the lowest price we've ever had. Now, that being the case, with the month-to-month no lock-in contract, you can also do 12-month or 24-month if you have a business and so on, and you can get an invoice to either the individual or the business. But the beauty is tonight, For the first 20 people that sign up, there's going to be no steak knives. I'm not going to give you a 2-for-1 or anything like that. This is pure and simple about data and crunching numbers. It's about facts, and it's about giving you the tools to make informed decisions yourself before you make a big outlay, being the money for acquiring a property. Now, as we spoke about, we haven't had this before. So if you get on board and you click on the link or paste that link, in fact, I might put it into the chat so all you guys can actually have it. So bear with me. I'm actually typing as we speak. Unfortunately, my my mouth is a lot faster than what my typing skill is. So I'll just put that in. Okay. Now, if you click on this link, as we spoke about, it's the first 20 people that get in. And with that, we'll get you up and running as very quickly by tomorrow, or have you running actually on tomorrow. The same thing is as well. I'm happy to be in contact with any of you guys that actually come on, and there you go. There's the actual link that I've just put through to your chat. If you click on that, or if it doesn't work, you copy and paste it into your web browser, then you can get rock and rolling. Now, if you're actually looking for a PPR for yourself or doing the investment property, whether it be your first or fifth, think about it. If you could save even the cost of doing this for 1 month, then it's worth the exercise. I can guarantee you that you will save a significantly more amount of money than what this software will cost you to actually utilize it and get the gains from the outcomes that you can for it. Okay, so that's about it for tonight. I'm happy to answer any questions that any of you guys might have. And will you please excuse me? I'm just going to have a quick drink of water, and I'll be back in about 10-15 seconds to answer your questions. All right, guys, I'm back with you. So first question, how long does it take you to find a property? Well, that being the case, it's going to depend on how much money I've got, because that's the first governing factor of basically where we can go and what we can do. Not just the strategy, but if I've got less money in an area, I'm going to be most likely, especially if I'm getting closer to a city, I'm going to be going for a unit or a townhouse rather than a house. I'm going to be going for a smaller land mass and so on. So it comes down to money first, then it comes down to what type of dwelling you're looking for and your expectations for what you expect to get for your money. So as far as how long does it take, I can find a property for, if it's realistic for the amount of money that I'm given to play with, so to speak, and do the research for you, I can find one in 10-15 minutes. But if I'm given something like a subdivision in a particular area where we need to do a lot more research, it can take several hours. So if you're new to this, or if you're just starting, you're investing in property and so on, I would always suggest that you do the more simplistic strategies first, like cash flow, like discount, like cosmetic renovations, and then move along as far as doing that. Get a few runs on the board, so to speak, not like the Australian cricket team, but do that, and then you actually start to gain more confidence, and then you'll actually start to be able to do it quicker and quicker. And like anything too, the more you practice on it, the better you get at it. Okay, do you train us on the software? Look, I'm happy to, if any guys that come on board tonight, I will have your details as far as your email and your contact details. I'm happy to do some training with anyone that comes on board tonight. I will do that personally. I used to train for the company for a living as well, so to speak, as well as being a researcher. But these days, I do a lot more buying for premium and clients at the moment. We're finding more and more people are very time poor, and the demand for me to actually do this for other people has increased. But of course, I'm here tonight to show you guys how to use the software like I do to get the results like I do as well. So in answer to that, yes, it's not something we just throw out there that, yes, we'll train you. But I'm telling you now, as far as this recording is, anyone that comes on board tonight, I'm happy to do some training with. Okay, next one. Are all suburbs the same as far as the searches? Well, that's a very general question. It's all going to come down, like we spoke about before, it's going to come down to how much money have we got, what type of dwelling are we looking for, what are our expected results? Because we always want to start with our goal in mind. So in other words, what we want to achieve, that's where we start off our research, and then we work our way backwards to building the steps to achieve that. So, yeah, the actual strategy for how we go about it, utilizing the system, can be quite different because the strategies that we're using are different also. So the amount that we can amend the criteria to get to the outcomes that we want to for any particular type of strategy, whether it be doing renovations or whether we're looking just for a discount house by the water down somewhere in Southlands or so on. They can all be similar, but we can jig them via the 34 different types of criteria where we drill down in the system to get very accurate for particular people. Okay, next one. Is all the information on the software current? Yes, it is current. We have it updated as far as RP data. That's updated on the 1st of each month for all the historic statistical data. But as the agents are actually selling the properties and the property information goes into the titles office, that gets updated daily. Now, as far as the software itself, the actual dashboard as well, it's updated daily. Okay. You're very welcome. Appreciate those kind words. Yes, we do try and give as much information as possible out to all the people that come to the webinars, because we do appreciate that you're actually giving us some of your time to listen to us also. So thank you for those kind words. Is $79 charged for 1 month only? Yes, it is per month. And as we spoke about though, if you're considering that you're going to be doing the research for a property where you could be saving tens of thousands of dollars just from outlaying $79, then I think it's money well spent. As I said, for me doing this professionally, I use this every day and it saves me significant amounts of time. Also too, before I actually joined this company, I was actually a client for 3 years before that, where I was doing investments myself, and the amount of time I spent on it, I got very, very proficient as well. You don't have to be someone that actually works for the company to get good at this. All it takes is a bit of practice, and as long as you don't get paralyzed by too much research as well, because that's the thing. It's like we talked about earlier in the presentation. Are you going to act? That's the big thing for a lot of property investors. They get so fearful from so many contradicting amounts of information coming to them that they never actually do anything. And time is the thing that makes us money, or that costs us money, especially when it comes to investing in real estate. Now, you've got to remember, and this is one of my favorite sayings, and I'm going to claim this because I haven't heard anyone else say it, do not listen to barbecue experts. What is a barbecue expert? It's someone, maybe a family or a friend, that you'll be having beers at a barbecue, and they'll talk about a property that they sold 15 years ago and they lost $10,000 on it, so all property investing is bad. This could be anything. He could have paid way too much. It could have been in a bad area. It could have had infrastructure coming in that was negative, like a new rubbish transfer unit or something. just be aware. The research is going to tell you everything. It's up to you to have the courage, once you know you've minimized the risk and increased the chance for your success by doing that such research, that you can have a much greater likeliness that you will succeed. Okay, what's this one? If we have a mentor already, is this software still of use to us? Of course it is. I totally back having mentors. It's great to have people that actually have done what you want to achieve. Now, as long as of course, I'm generalizing now too. This question from this particular person, I don't know who your mentor is, whether it's a financier, whether it's a property advisor or what. However, I think mentors are fantastic and they're a great way of avoiding a lot of pitfalls. But the software here, this is about crunching data. It's about looking at information and researching to the best of our ability to save us time and money from making mistakes on things that, if we hadn't have at least done the research in the background, then it was going to cost us time or money or both. So yes, no matter what your mentor is, no matter what line of business they're in, this software is of use to everybody that does anything to do with property investing. We have clients that are conveyancers, we have clients that are lawyers, we have clients that are accountants, we have clients that are financial advisors. The amount of people from the property industry that utilize our software, I couldn't even count, because they know that this saves them time. And as we've already talked about, and I sound like a broken record now, time is money. So yes, it's definitely of use no matter what you're doing as far as within the property industry. All right. Do you have an Australian version? Yes, we're a New Zealand formatted company first and foremost, and we were born in New Zealand, but we do operate in Australia as well. So yes, the version of what you've been looking at tonight is available in Australia. And yeah, if you want to write to myself, in fact, what I might do for people, that gentleman, I'm looking at the spelling, it could be a gentleman or a lady, so my apologies if I'm offending you in any way because of the spelling. I will get your email and I will, thank you, thank you very much. I will get your email and I'll write to you from my personal email. I don't want to put it across the internet, so to speak, but I'm happy to answer that question and any questions you have about the Australian versions as well. Okay, if we sign up tonight but cannot use the software immediately, can we start the 1 month period when we are ready? No, you can't do that. The reason being that once we get you on board and register you, we will actually start paying the third parties for the data information, whether you're utilizing it or not. Now, if we're talking about $79, you know, and as an insurance policy for saving you either thousands or tens of thousands on actually your next acquisition or the one that you don't buy, I still think that's a very viable thing for a very small amount of money. Okay, guys, well, if is there any more questions? I'm happy to answer any more before we get going tonight. You're very welcome. Thank you for saying so. Just wait for another couple of seconds. As we talked about too, you know, this is the cheapest price we ever had, and I know it sounds like I'm going round and round saying it, but I am, you know, scratching my head that the company is actually offering it for this price, because I'm sure you guys would have seen, if you're even going to get RPNZ just for 1 month without any of our software, you would be charged at minimum 2 times what the $79 is going to be. So, all right, guys, well, there doesn't seem to be any more questions. I would like to say thank you for joining us tonight. We do appreciate you spending your time with us, especially in the evening, and even more so getting closer to Christmas. I will hopefully catch up with some of you guys in the next few days for any further questions and so on. But for the ones that I don't, I would like to wish you a happy, safe, and wealthy Christmas and a great new year. See you later, guys. Thank you. Bye.